Would not surprise me, not even a little bit, to see $10,000 gold before the end of 2020. The amount of paper gold, but this would be true of silver also, relative to the physical supply, is probably 100 to 1. You're looking at that and saying, hey, what if the US doesn't like something I do? What if I'm on the blacklist someday? Maybe I ought to diversify into gold. And silver's along for the ride. You at that point, you're looking at $200 an ounce. So when people say, when is the BRICS currency coming? I say it's already here. It's called gold. Central banks are net buyers. That tipping point transition, that was in 2010. From 1970 to 2010, central banks were net sellers. Since then, they've been net buyers, but the number of central banks joining in and the amount of net buying is continued to increase. So that's just a good fundamental driver. And it's important for investors because central banks are actually pretty smart buyers. They mess up other things, but they're pretty good when it comes to buying gold. They don't chase the price, but they kind of put a floor under it. No guarantees, but they buy the dips, to use a cliche. Russia's a good example. They're very transparent. They would just put in a standing order. 10 tons a month or whatever. They didn't want to disrupt the market. But if they see a dip, they'll buy it. So you've got it's great for investors because you have all the upside. But the downside is kind of limited because the central banks will step in.
Stop watching the retail hype and start watching the whales. Central banks aren't just investing in gold, they are setting a permanent floor under the market. When the biggest players in the world are buying the dips on a standing monthly order, the downside risk has effectively vanished.
21st century warfare is financial warfare. And this a lot started with the effort of really the EU, but the US was involved at the early stage to steal $300 billion of treasury securities from Russia that Russia bought them legally, made the money on oil, bought them legally, put them in a custodian in Brussels called Euroclear. But when the war broke out in 2022, those were frozen. That's to be expected. But Europe took steps to steal them and use them as collateral for a loan to Ukraine. So Russia would be financing Ukraine in a war where they're fighting Ukraine. It was a crazy idea. It seems to have died down, but it was out there discussed for years. Well, if you're Saudi Arabia or Japan or Taiwan or Brazil or any large holder of U.S. Treasury securities, you're looking at that and saying, hey, what if the U.S. doesn't like something I do? What if I'm on the blacklist someday? Maybe I ought to diversify into gold, and they're doing that. So you have, again, I'm not saying they're dumping treasuries. That narrative is not true. But as new reserves come in, they are buying more gold. So these are really fundamental things that are pushing the price up, and they're going to keep it there.
The math of the silver market is a ticking time bomb. With 100 digital promises for every one physical ounce, the system relies on no one asking for their metal. The moment a major buyer demands physical delivery, the paper market collapses and the price of real silver goes vertical.
The amount of paper gold, but this would be true of silver also, relative to the physical supply, is probably 100 to 1. So as long as everyone's rolling the contracts over, not demanding delivery, etc., the market works fine. But the minute some segment of the market says, you know what, give me the silver, give me I want physical delivery.
Yeah.
All of a sudden, the commodities exchanges and the warehouses, the custodians are saying, well, wait, we don't have that much silver. They have to go get it. I'm not saying there's been a default, but what I'm saying is all of a sudden there's a scramble on the physical side to keep up with the paper side. You can never keep up with the paper side. It's way too big. So then you get into the dynamics of a short squeeze. So that's driving it. But I've said all along, if gold's going where I expect, and I've given a forecast to my readers in my newsletter, Strategic Intelligence, of $5,000 by the end of 26. I called my editor the other day and I said, we have to publish quickly because I'm going to hit that before we publish the forecast. But
I was going to say, are you going to move that forecast now?
Well, I probably will. I mean, candidly,
Most people think in linear terms, but Rickards explains why gold's move will be exponential. The jump from $9,000 to $10,000 is actually a much smaller percentage move than the one we just survived. Once the momentum takes over, these $1,000 jumps will happen in days, not years.
each $1,000 benchmark is easier than the one before because you're working off a higher base and it's a smaller percentage. And just to give a concrete example, when you go from $3,000 to $4,000 an ounce, that's a 33% gain. But when you go from $9,000 to $10,000 an ounce, that's only 11%. That's like a good week the way gold's been going. So my point is, you're like, hey, it took a really long time to get from 3,000 to 4,000, which is true. But so therefore it's going to take forever to get to 10,000. That's not true because it'll make its way to 5 or 6, but it's going to go 7, 8, 9, 10 really quickly.
Stop waiting for a BRICS coin announcement. As Rickards reveals, the new global currency is already in operation. It's physical gold. It's the only asset that Russia, China, and India all trust for trade settlement. The gold standard didn't die, it just went underground to bypass the Western banking system.
They don't have a common currency. So how do you do that settlement? I mean, Russia is going to be up to their eyeballs in yuan. If China keeps, paying them in yuan, how much do you really need? The answer is they do have a common currency. It's gold. It's not the unit. It's not a new BRICS currency. It's gold because gold is, ironically, you can convert it into dollars, in real time. So let's say I owe you a bunch of rubles and you owe me a bunch of yuan. First of all, you can settle on a net basis, not a gross basis. So the net number is much smaller. You don't have to settle in real time. You can do it quarterly or twice a year, and you can settle it in gold. I'll just say, okay, Danielle, the balance is in your favor. Here's a certain amount of gold, done. And we all agree that gold is money good and it's easy to value based on global markets. So when people say, when is the BRICS currency coming? I say, it's already here. It's called gold.
The consensus from Rickards is clear. We aren't at the end of the rally, we are just finishing the warm up. Whether it's central banks building a floor or the BRICS nations using gold to settle billions in trade, the fundamentals are undeniable. If you're waiting for a better entry point, you might be waiting while gold hits 5 figures. Secure your physical position now before the 100 to 1 paper trap snaps shut.